morning, ladies and gentlemen. My name is Vasil Dikov. I am a senior account manager with GDMFX, and today I will bring you to the market outlook. For today, we're going to start with the North American markets and the events from there. Had durable goods orders at 5.1%, weaker than expected at -4%. Durable goods orders ex transportation 0.8%, weaker than expected 0.5%. Pending home sales for the month and the year 1.2% weaker than expected 0.2% and 1.4% less than the previous at 1%. And the dollar briefly strengthened yesterday after the Fed left interest rates on hold at 0.5% while hinting that it could hike the interest rates as soon as September. However, its gains were short-lived as currency soon returned to its levels before the announcement. A disappointing report on durable goods orders released earlier in the day encouraged traders to wait for more information before taking a long dollar trade. Near-term risks to the economic outlook have diminished, the Fed rate setting committee said in its statement. It added that it expects economic activity to expand at a moderate pace while the labor market continues to strengthen. Investors will now turn their attention to Friday's reading on second quarter gross domestic product, which could derail the Fed's plans to raise rates if it comes in markedly below expectations. Today we'll have the initial jobless claims and the employment change from the US. The Dow Jones moved sideways yesterday. The Nasdaq was 14 points up. The Dixie was down to 96.65 from 97.19. And the biggest mover was the US dollar versus the Swiss franc, 75 pips down. From Europe, we had from Germany the GfK Consumer Confidence Survey. It came out better than expected at 10 points. Today we're going to have, again from Germany, unemployment change, unemployment rate, CPI for the year, harmonized index of consumer prices yearly, CPI monthly, and again a harmonized index of consumer prices for the month. Moving on to the UK. We had yesterday the GDP reading for the second quarter 0.2% better than expected at 2.2%, and GDP for the year 0.2% better than expected at 0.6%. The better than expected results on the GDP readings did little to impress the markets as the pound continued to go down after the release data. Sterling dropped with 0.2% versus the greenback and 0.3% versus the euro in the London trading session. However, the poor durable goods orders and the modest FOMC minutes pushed the sterling up against its major rivals in the North American session. Overall, investors will be focusing on the next Bank of England meeting, as it will shed more light on the way the bank will be acting on its monetary policy. The FTSE 100 closed at 6,680 yesterday, and the pound moved with 100 pips up versus the Japanese yen, 95 pips up versus the Australian dollar, and 80 pips up versus the US dollar. For the rest of the week, we're going to have the GfK Consumer Confidence, the Consumer Credit Rating, and the mortgage approvals. In Asia, we had the foreign investment in Japanese stocks for July 22nd, minus 271.5 billion yen versus the previous reading of 443.7 billion yen, indicating a capital outflow, and the foreign investment in bond investment is nearly 3 times lower at 679.3 billion yen versus the previous at 1,715.5 billion yen. The Japanese local government sources noting that the Japanese Prime Minister Abe's stimulus package is expected to include around 7 trillion Japanese yen in spending. In Japan, traders are looking ahead of Friday's monetary policy review after Prime Minister Shinzo Abe announced a fiscal stimulus package exceeding 28 trillion yen on Wednesday in a bid to jumpstart the economy. Japanese Economy Minister Nobutaro Ishihara said he hopes the Bank of Japan will take appropriate decision at the Bank of Japan policy review meeting concluding tomorrow, especially in the light of Shinzo Abe's announcement of a bigger than expected fiscal spending package a day before. He thinks people at the Bank of Japan will take in account and make the appropriate decision. The biggest movers were the euro versus the Japanese yen, 90 pips up, and the Swiss franc versus the Japanese yen, 85 pips down. Also, the Chinese yuan versus the US dollar was 160 pips down. In the Pacific, from Australia, CPI quarter on quarter came out at 0.4%, and CPI year-on-year 0.1%, weaker than expected at 1%. And finally, the commodities. The EIA crude oil stock exchange surprise built in crude oil inventory. The 1.7 million barrel increase to 521.1 million barrels was against market expectations of 2.3 billion fall. The gold prices turned positive in North American trade on Wednesday after data showed the US orders for long-lasting manufacturing goods fell more than the forecast. Oil prices recovered slightly from April lows in early trading on Thursday, but the outlook for the industry remained weak as crude producers and fuel refineries continued to pump out more than the market can consume. The S&P 500 index had a range of 17 points. It is at 2,163 right now. Gold had a range of $27 up to $1,338 right now. Silver had a range of 90 cents. It is at $20.29 right now. Crude oil had a $1.50 range, down to 42.04 cents right now. And natural gas is trading at $2.65 at the moment with a range of 8 cents. And Thursday we're going to have the EIA natural gas storage change, and as usual Friday we're going to have the Baker Hughes oil recount. Thank you very much for your time today. Have a good day.